All right, let's get right into it. Picture this. It's 2026. The financial news you're seeing isn't just a little biased, it's been engineered. Those headlines flashing on your screen, they're not just information anymore, they're weapons, and they're designed with a very specific targeted mind. We are walking straight into an era of synthetic reality, and today we're going to give you the playbook on how to survive it.
So, a headline like this flashes across your feed. You feel it, right? Your heart rate picks up, you get that itch to check your portfolio, maybe make a trade. Well, that feeling is not an accident. That alert was probably crafted by something called a sentiment injection algorithm, and its one and only job is to trigger a biological response in you, that overwhelming gut punch feeling that you have to act right now.
Then you see another alert, and another one. Look, this isn't your typical case of just having too much information to sort through. This is an entirely new class of information. We are talking about synthetic information, and it's not designed to inform you. It's designed to influence you, to poke at your most primal instincts.
Now here's what's both revolutionary and, let's be honest, kind of terrifying. AI can now spin up millions of unique articles, social media posts, and forum comments to fake a market trend that doesn't even exist. It can literally create the illusion of a massive market shift with nothing more than code.
So that brings us to the most important question for any trader or investor right now. How do you tell the difference? How can you possibly know if you're looking at a real market move backed by real money or just a ghost, a phantom cooked up in a server designed to take your capital? Well, figuring that out is what this whole explainer is about. To know how to defend yourself, you first have to understand the weapon being used against you. So let's break down the mechanics behind this new threat. It all starts with something called a synthetic signal.
At the very heart of this operation is what our source material calls synthetic sentiment. Now, what's really key here is that we're not talking about those dumb, old-school bots spamming the same message over and over. No, we're talking about advanced large language models creating millions of totally unique, human-sounding opinions to manufacture the illusion of a market consensus.
And the scale here is just staggering. An institutional player can use these tools to generate 50,000 unique, bullish opinions on a stock or a crypto asset in seconds. Think about that, 50,000 different voices, all screaming buy, popping up on different platforms, and every single one looks like a real person.
And what's the result of all this manufactured sentiment? You get what's called a ghost trend. It's a price move that shows up on your chart. It looks real, it feels real, and it seems to be backed by this overwhelming wave of positive chatter. But here's the catch. There is no real volume. There's no smart money behind it. It's a complete mirage.
Okay, so how exactly do they pull this off on a technical level? Let's get into the weeds a bit, because this is where it gets really clever. This is where your own tools actually get turned against you.
Here's the playbook. First, a big firm unleashes these adversarial LLMs. And like we said, they're not creating spam, they're creating context. Deeply nuanced arguments, discussions, everything. So your own AI sentiment aggregator, the very tool you're paying for to get an edge, it can't tell the difference. It sees this flood of unique posts and flags it as a high-confidence signal. Next thing you know, it's telling you the market is screaming buy. But what you're really buying into is a consensus that was faked just moments before.
And this really just illustrates the danger perfectly. The source puts it pretty bluntly, and it is absolutely worth repeating. You aren't following the smart money, you are following a software script designed to lead you to the slaughter. You literally become the exit liquidity for a trade that never even really happened.
Now, if that wasn't already concerning enough, the attack gets even more sophisticated. You see, it's not just some widespread blast of fake news. It can be tailored specifically to you to exploit your personal weaknesses as a trader.
This is where something called cognitive profiling comes into play. That AI-powered newsfeed you use, the one that promises personalized insights, it's also learning your behavior. It knows your panic threshold. So, for example, if your trading history shows that you always sell a position when it has a 2% drawdown, the algorithm learns that. It now knows exactly what kind of headline to feed you to trigger that specific fear and get you to hit the sell button.
And this slide just lays out the fundamental shift perfectly. We've moved from an era of objective information, which just gives you neutral facts for you to analyze, to this new era of reaction-optimized information. This new stuff is engineered for one single purpose: to break your discipline by maximizing a specific fear that it knows you have. It's not about informing you anymore, it's about provoking you.
So, you have to ask, why go through all this trouble? What's the financial motive? Well, the goal is to harvest liquidity from retail traders, from people like you. By creating these personalized echo chambers of panic, they can get you to buy or sell without them ever having to place a huge market-moving trade themselves. They just manufacture the story, and you move the market for them.
Okay, so that's the threat. It's sophisticated, it's personal, but it is not unbeatable. So now we pivot to the solution. This is your defense strategy, a clear, actionable filter that will help you see right through the deception.
All right, the first and most critical tool you have is checking for volume/sentiment divergence. Just look at this graphic. This right here is the dead giveaway. If your AI aggregator is showing extreme bullish sentiment, with those sentiment bars spiking through the roof, but the actual institutional volume is totally flat or even declining, you are looking at a ghost trend. This divergence is your BS detector. If the big money isn't moving, the story is fake. Period.
Second, and this one might be tough, you have to change your habits. Stop using real-time AI news feeds. I know, it's a hard pill to swallow, but by the time a breaking headline hits your screen, the high-frequency trading bots have already priced it in. You are seconds, maybe even minutes too late. The bottom line is, if you aren't a machine, you can't win their game, so don't even try to play.
And the final rule is something we'll call the primary source protocol. It's simple. You never ever trade a headline if you cannot verify the raw data yourself. This means you go directly to the source, to the official SEC filings, to the company's earnings reports, to the on-chain data. If your only source is an AI-summarized article, you have to treat it as complete fiction until you prove it otherwise with primary data.
So these tools are your filter, but the ultimate defense, the real armor, isn't a tool at all. It's a mindset. To actually survive and thrive in this new era, you have to fundamentally change your relationship with information itself. And this is the new paradigm. You know, for decades, the edge was all about having faster access to more information. Well, in 2026, that has been completely flipped on its head. The ultimate edge is now having the mental and emotional discipline to ignore almost all of the information being hurled at you. Your real edge is your filter.
And this quote from the source material just captures it perfectly. In an age of synthetic noise, silence is your greatest asset. In a world of algorithmically generated noise designed to make you panic, the ability to just step back, be patient, and find clarity in the quiet, that is your greatest strategic asset.
So when you boil it all down, it comes to a choice. Every single time you react to a headline without thinking, you're just feeding the machine. You become another data point that helps their algorithms get even better at manipulating the next person. The alternative is to become what we call a sovereign trader, someone who acts on their own analysis, not on manufactured emotion.
So, what's the one thing you should walk away with? If you remember nothing else from this, remember this mantra. Don't trust the headlines. Don't trust the sentiment scores. Don't trust the story. Trust the primary data, the volume, the filings, the on-chain numbers. Trust the data and ignore the noise.